Imagine waking up tomorrow and discovering that something invisible has more influence over your life than your vote, your job, or even your government. It doesn't wear a uniform, it doesn't give speeches, and no one ever elected it. Yet it decides which countries panic, which governments fall, which wars get funded, and which lives quietly become more expensive every year. That thing is money. Not coins, not bills, but money as power. And the strange part is this: money didn't take power in a coup. It wasn't voted in. It just accumulated it, slowly, legally, almost politely. And right now, that power is stronger than it has ever been. This matters today because we keep arguing about politics as if politics is still the main decision maker. Elections, parties, leaders, laws. But beneath all of that, there's another system humming along, one that doesn't care who wins debates or who promises what, a system that reacts only to risk, return, and confidence. And when that system moves, everyone else scrambles to follow. To understand how money gained power without anyone voting for it, we have to go back to when money wasn't supposed to be powerful at all. Originally, money was just a tool, a measuring stick, a way to make trade easier. You had wheat, I had shoes. Money saved us from arguing about how many loaves equaled one boot. That was it. No ideology, no dominance, just convenience. For most of history, political power and money power were separate. Kings ruled by force, states ruled by law. Money followed orders. If a ruler wanted coins minted, taxes raised, or debts erased, it happened. Markets existed, but they were small, slow, and local. Capital couldn't easily escape authority. Then something subtle changed. States started borrowing, not as emergencies, as a habit. Wars got more expensive, empires stretched farther, tax systems couldn't keep up. So governments began issuing promises instead of collecting payment up front. Bonds, IOUs backed by the future. At first, this didn't look like power shifting. It looked like partnership. Governments got money now, lenders got interest later. Everyone smiled. But over time, lending did something strange. It flipped the relationship. When you borrow occasionally, you're still in charge. When you borrow constantly, your lender starts paying attention. When you depend on borrowing just to function, your lender becomes something else entirely. Not a helper, a judge. By the 20th century, especially after the World Wars, debt was no longer a temporary bridge. It was the foundation of the global system. Governments rolled over old debt with new debt. Central banks smoothed things out. Financial markets grew deep, fast, and global. And here's the quiet trick. Money stopped being just stored value. It became mobile authority. Capital could move across borders in seconds. Governments could not. That speed difference changed everything. If investors liked your country, money flowed in. Your currency strengthened. Your borrowing got cheaper. Growth looked easy. If investors got nervous, money flowed out. Your currency weakened. Prices rose, budgets broke. And suddenly politicians were giving speeches about difficult but necessary choices. No tanks, no invasions, just exits. This is where money's power becomes uncomfortable. Because no one votes in financial markets. There's no election day where capital decides to support you or not. It reacts continuously, mechanically, without empathy or memory. It doesn't care if policies are fair. It only cares if they're profitable and predictable. And the math behind that reaction is brutally simple. Let's say a country needs to borrow to function. It issues bonds. Investors buy them if the interest rate compensates for risk. If investors think your future looks unstable, they demand higher interest. Higher interest means higher costs. Higher costs mean budget cuts or more borrowing. More borrowing increases risk, which pushes interest even higher. That feedback loop isn't political, it's arithmetic, and arithmetic doesn't negotiate. Here's the irony. Democracies expanded at the same time money gained this power. People won the right to vote, organize and protest, but the most important economic decisions shifted into systems that don't respond to votes at all.